What is income protection? Income protection is an insurance of our income against injury or sickness. It will provide income to us one day if we cannot work due to any health issue, no matter it is physical or mental, no matter it happens inside work or outside work. The income will be provided until we can go back to work, or to the end of the benefit period. In most cases, it will provide income to age 65 or age 70. Actually, income protection is the most important personal insurance. There are two types of income protection policy: agreed value policy and indemnity policy. With agreed value policy, that means you and the insurance company agree with each other. One day, if you cannot work, insurance company will pay the monthly benefit on the policy schedule. It has no relationship to your future income. That means no matter how much your income is in the future, as long as you cannot work, the insurance company will pay the monthly benefit on the policy schedule. That means your future income is guaranteed. But with the indemnity policy, it is another story. With indemnity policy, one day if we cannot work, the insurance company will compare the monthly benefit on the policy schedule and 75% of your income before you get injured. They pay the lower one. That means if your income is due to any reason, if your income is lower in the future, and at that time if you cannot work, then the income paid by income protection policy will be lower than the monthly benefit on your policy schedule. The benefit period is a period that insurance company will provide income to us when we cannot work. Some income protection policy can only provide income for 6 months or 1 year, while some income protection policy can provide income to retirement age, such as to age 65 or to age 70. Waiting period is the period from the day we cannot work to the day insurance companies start to pay income to us. For example, if the waiting period is 1 month, then one day if we cannot work, and after 1 month, if we still cannot work, then insurance companies start to pay income to us. When we consider waiting period, we need to consider our sick leave, annual leave, and savings in the bank. A good recommendation on waiting period can help us save a lot of premium and get good protection. The premium of income protection is tax deductible. That means the money you used to buy your income protection is tax-free. For example, for a doctor, male, 45 years old, and his monthly benefit is 18,000, and the monthly premium is 241. Because the premium is tax deductible, so 47 can be claimed back. That means 113 can be claimed back from the tax. So actually what the doctor paid every month is 128. That means nearly half of the premium is claimed back by tax. A lot of clients ask whether they should keep income protection inside or outside superannuation. First of all, we should understand no matter we keep the income protection inside or outside superannuation, the premium is tax deductible. But if you keep it inside superannuation, you can only claim back 15% of the premium. But if you keep it outside superannuation, you can claim back 37, 42, or up to 49% of the premium. Depends on your income. Secondly, in superannuation, right now you can only have indemnity policy. You cannot have agreed value policy. That means if you keep the policy outside superannuation, you can get a better policy. When you take an income protection policy, it is very important for you to compare the premiums from different insurance companies. Sometimes for the same insurance cover, the premiums from different insurance companies are very, very different. For the example below, we have compared the premium from 9 insurance companies. You can see the lowest premium is $230.40, while the highest one is $395.77. The highest one is 72% higher than the lowest one, so it is very important for you to compare the premium. When you buy income protection, there are something you need to pay attention to. First of all, you need to pay attention to this policy is agreed value policy or indemnity policy. Agreed value policy gives you much better protection, so we recommend you to take agreed value policy. If your policy is indemnity, we recommend you to review it as soon as possible. The second one, the benefit period. This one is really important because right now we have found in the market there are a lot of income protection policy. The benefit period is just 6 months or 1 year, while the correct income protection policy, the benefit period should be to age 65 or to age 70. Okay, so if your benefit period is just 6 months or to 1 year, we highly recommend you to review it as early as possible. The third one is waiting period. Because waiting period affect the premium a lot, so a good recommendation on waiting period can help you to reduce the premium significantly while you still get a good protection. The last one is the premium comparison. As I mentioned to you before, with the same cover, sometimes the difference can be more than 50%. So it's very important for you to get the premium comparison and select the competitive one. This will help you to save a lot of money. When you buy income protection, there are something you need to pay attention to. First of all, you need to pay attention to this policy is agreed value policy or indemnity policy. Agreed value policy gives you much better protection, so we recommend you to take agreed value policy. If your policy is indemnity, we recommend you to review it as soon as possible. The second one, the benefit period. This one is really important because right now we have found in the market there are a lot of income protection policy. The benefit period is just 6 months or 1 year, while the correct income protection policy, the benefit period should be to age 65 or to age 70. Okay, so if your benefit period is just 6 months or to 1 year, we highly recommend you to review it as early as possible. The third one is waiting period. Because waiting period affect the premium a lot, so a good recommendation on waiting period can help you to reduce the premium significantly while you still get a good protection. The last one is the premium comparison. As I mentioned to you before, with the same cover, sometimes the difference can be more than 50%. So it's very important for you to get the premium comparison and select the competitive one. This will help you to save a lot of money. Okay, what can we do for you? If you already have an insurance policy, we will review your current policy to see whether we can improve the benefits. That means we will try to make the future potential claim easier. Second, we will compare the premiums from other main insurance companies to see whether a more competitive premium is available. Finally, we will provide you a report on our review without any charge. That means we don't charge any fee. We give you the comparison. If you think we can improve your policy and you want to go ahead with us, it's fine. If your current policy is good, we will recommend you to keep the current policy. Okay. Second, if you don't have an insurance policy, we will discuss your insurance with you and then design the policy according to your requirements. Why us? First of all, we have focused on insurance since year 2000. We provide professional and high-quality insurance advice and insurance services. Secondly, we don't charge any fee on our clients, so the premium we calculate for you is exactly the same as the premium you get directly from the bank or insurance company. There is no difference. Thirdly, we compare the premium from main insurance companies and recommend the policy based on the premium and the services from the insurance company. If the insurance company doesn't offer good customer services, we don't recommend the policy from that company. Finally, we provide quick assistance in the time of the claim.